Here's everybody getting smoked today, and Frank is the hero of the day with his puts on. How are you feeling today, Frank? Let us know. Let us all be jealous. We got absolute turmoil going on in the markets. S&P down 3%. The NASDAQ's down 4.5%. Gold's down 2.24%. What is going on, guys? I know that we're going to get a lot of people in here today. So we've got a lot of interest. And look at good old-fashioned VIX. Look at this, guys. VIX is up to 55 today. That is a 135% move to the upside. Oh my goodness. Almost probably a no chance that you get 25 cut. Look at this. So the September meeting, you are talking about, oh my goodness. Oh my goodness, guys. That is crazy. There's an expectation for, ready for this? 88.5% chance that you see a 50 basis point cut and no chance of a 25. And there's a 11.5% that you get a 75 basis point cut. Guys, if you see this, no bueno. Terrible, terrible news. Okay? Let me be clear. If you get a 75 basis point cut in September, it's going to be ugly, because a 75 basis point cut is going to freak out the market, because then it's like, oh, we are actually in a bad spot. At this point, you know, a week ago, 2 weeks ago, I was saying, let's hope for 25 basis points. And that is no longer even a possibility according to the Fed funds futures, trading. The bond market thinks there's a very likely chance we're going to get 50 basis point cuts, with a small chance that we're going to get 75. 75, guys. What has happened? No wonder the volatility is so high this morning. You've got the NASDAQ selling off 5%. The S&P 500 was down nearly 4%. And don't even get me started about the Japanese stock market. Have you guys seen this? Look at this. From peak to trough, right? Anybody got a guess? Guess it in your head. How much is this thing down right now? Oh my goodness. 25% down in less than a month. Ready for this? At one point this morning, 27.5% down in less than a month, ladies and gentlemen. That is serious selling. This is the Japanese stock market, and the U.S. stock market is following suit today, it seems. Gold down. I am looking at gold as a possible buy the dip opportunity. I will be very transparent about that. I took a trade on Friday, just took a loss on that one. Not a lot of stuff is working out for me. I'll be straight up with you guys. But one thing that is working well, my dollar Swiss position is a monster trade right now. There's the one thing that's really working out for me. I mean, I do have in my safe account, my boring account, I have a lot of TLT and a lot of bond stuff. That stuff is rock star right now with yields falling off a cliff. TLT's up another 1.55%. Bonds are actually doing their thing. This is so exciting for boring investors, traders like me. This is exciting. TLT up today, 1.5%, doing what it's supposed to do, offsetting some of the volatility in my stock investments, in my index trading. TLT is a monster right now. I think I have a good bit of my safe account. I call it my house fund. My wife and I have a house fund, and in the house fund, we're looking at a nice, not a positive day, because there's also a bunch of consumer staples in my safe account, which are getting crushed today. Everything's getting crushed today. But TLT is seriously holding its own on today. So very nice. 2-year yield. Again, this is what's telling me, guys, there is a possibility. There's a possibility that we see a Fed cut before September. Not a certainty, but a distinct possibility. VIX hit 65. Yeah, look at that. VIX coming off of its highs. We'll see what happens from here. The NASDAQ, again, long wick off the bottom here so far, but I really would not be surprised if on the weekly chart we are headed to test this low here, just around 17,000. Big slide on the NASDAQ. It's one of those days you just got to sit back and watch all this stuff happening. It is crazy.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
It's a Black Monday. And I didn't foresee
feels
it.
like it, yeah.
I didn't see it coming. Like I normally see things happening, but this one is a funny one. So I guess it's a turmoil of a lot of things, which one was the hideous NFP number on Friday. Ultra low, like we've not seen that in a long time. Mm-hmm. And inflation already ish around. So, the labor market has been strong for so long time. So was it the last line of defense that the market had to say, okay, we actually have something going on and now we don't have anything anymore?
Yeah, I mean, that's the question. I mean, the sell-off in just everything. I mean, everything is selling off, even gold and silver, oil, stocks, gold, silver, Bitcoin, Ethereum, name anything except for the yen, Swiss franc, and TLT. And, it's likely down today. So very interesting, to say the least. Is there any chance that we bottom out around this 141, 142 range for the dollar yen?
100%. Or not. The thing
100% that there is a chance.
Yes, there's a chance.
Yeah, right.
Now, remember, people, what generally has to happen is that we have to find a bottom somewhere. This isn't going to be forever, and I try to go back to 2020. Yeah, there's 2020. Like, this felt like forever. Every single day was a new bottom. Yep. Bottom. We fell from top to bottom 36%. Today, I think so far, okay, as I checked previously, was like 10% maybe. We have fallen from the peak.
Yep.
To me, this is just a normal correction. Like, what's the matter, people? Why are you crying about? So yeah.
First 10% move I've ended in over a year. I mean, actually, I was looking at seasonally what's happened. I want to show my screen just for a second, Chandler and James, if you don't mind. Check this out. On the S&P 500, we made this similar move about a year ago, and you can actually see how that played out. So this is literally August 1st, 2023. We saw a sell event that took longer than this one, but ended up going around 10% down, and that ended up being a wonderful buying opportunity for the market to continue to rip higher. So is this one big buying opportunity? We will see. But what does concern me is the velocity at which we are selling. In the last year, we saw 10% down in like 3 months. This time we see 10% down in 20 days.
Yeah. Does it matter? Does velocity matter all of a sudden? It does. It I kind of love it. I like it. I'm glad I didn't buy 1st of August at the high. Second of all, okay, so let me take you through what does it mean? Where is this coming from? So where we have seen some tech layoffs, we have seen some miss on earnings. We have seen for quite some time the slowdown in the US economy, but it's the last one to slow down, or maybe the second last one to slow down. Australia still hasn't done it. And then we have had strong NFP, we have had strong unemployment, we have had strong inflation for quite a while. Now we have massive layoffs, or massive as they call it, massive layoffs and a slowing economy. it might be the perfect storm. But people, this isn't 1930s. If this one crashes 20% tomorrow, there is checkpoints. There is rules and regulations in place. If the stock market now goes to circuit breakers, it's 7.5 in a day or something. Doesn't really matter, because in the end, what was COVID? Everything shut down. It was a buying opportunity. So,
yeah. Well, there's also something. Here's some ammunition for the bulls right now. Some ammunition for the bulls are, let's think about where interest rates currently are at. 5 to 5.5%. Think about this, Ivan. The Fed has a lot of ammunition, a lot of room if they need to bring those rates down. That's a very historically, or in recent history, that's a high base federal funds rate, which now is, with hindsight in our favor, looks very restrictive. And the Fed is likely to cut those, and that gives them ammunition to try to support the economy. They have room to cut. They have more room to cut here than they did in COVID, right? So if we think about that, they have plenty of room. The drawback that you could point to is that the economy is probably much weaker right now than it was going into the pandemic, right? Going into the pandemic, we had, people had a lot more money in their pockets. Nowadays, inflation has really hurt people. So, it's a bit of a give and take. But again, the Fed has a lot of ammo to try and defend this sell-off, right?
Yes. Back in COVID, before we started, it was 275, if I don't remember correctly. If I don't remember wrong. And secondly, when we were buying bonds at record high and we put interest rate to zero or almost, there was no more interest rates to go lower. Like, that was the bottom. They didn't want to go beyond negatives. So in that sense, we have 5%. And what generally is like a line of a lot of things is 2.5, 2.5, 2.5. 2.5 inflation, 2.5 interest rate, 2.5 inflation, 2.5 in growth is kind of what they want to be at. So 5 is...
Ivan, I don't mean to cut you off, but we're about to have Services PMI, so let me just do our breaking news really quick. Sorry about that. All right, and Services PMI should be dropping here. 51.4, coming in line with expectations. Not particularly exciting, but also positive. So NAS 100 up just a little bit. US 30, SPX up a little bit here. GBP, Euro, a little flat. Dollar index just slightly positive on this. Gold, a little bit of a mixed reaction here. And WTI seeing a little bit of support. So maybe a little bit of something for the bulls to chew on today.
I started taking a note of the futures market last night. And so I was a light sleeper just to see, like, okay, let's see what happens. I mean, we got a sample of like things are a little overreactive on Friday, right? Like, I mean, we were noticing some pretty critical levels. I just think what's funny is this is the technical stuff that I talked about, but how it happens is just so violent to the downside. And so, like I said, I saw that we gapped lower coming into Sunday's futures market. We started pushing lower, red on the night, and I'm like, this is going to be a rough Monday open. Yeah. Like I said, I was a light sleeper. I was just monitoring things, watching things, and look, man, like it's not great. I mean, looking at the bid-ask prices are all over the place. If you're in the futures market, things are pretty darn wide right now. But I just finished up a live session. As happy I was coming on with you guys today for this reason. Look, it can always be different, right? But is this 2020? Is this a pandemic? Is this 2008 with a global financial crisis? I don't think that it is. But man, it's amazing how this market will treat it like it could be or might be. And it's just crazy risk off that we're seeing, in the last, I mean, we've only been open for 40 minutes as far as stock trading, but futures market last night at 6 p.m. we're showing this the entire time.
Yeah, and you got to think about this too, Chris. Here's something to I was just mentioning to Ivan. If we switch over to my screen for just a second, I want to look at, this time last year. This is, true to seasonality right now. We are seeing this thing roll over. right in line with what happened last year at this time.
Yep.
But there's a difference, and the difference is the trajectory at which case this current pullback is happening. So last year we saw about a 10% correction between the months of August 1st right into the end of October. So we saw about 11% dip in the market. That ended up being a really good buy the dip opportunity before it went much, much higher. But it took 90 days for the market to move 11% down. I mean, hindsight 2020, but my goodness, a 10%, 11% correction over 90 days sounds a lot less threatening than, I got to admit, what we're seeing here today, which
Right.
is that same magnitude of a move on the S&P 500 happening in just 20 days. So a couple weeks. So my question to Ivan, and now my question to you, is, does this magnitude matter? Does the speed, the trajectory, the volatility increase that we see this time around on this pullback, does this feel different than it did in April? Does it feel different than it felt last year around this time, where we are seeing, normal percentage pullbacks, but the speed at which this thing is pulling back is a little bit concerning? It might have more room to the downside, and I am coming from a bull, so I am bullish on this market. But what do you think?
Yeah, I think the speed is definitely concerning, because what it creates is, what you're looking at in your accounts and what you're discovering, in your trading right now, is that liquidity isn't necessarily there like we're used to it being. The bid, the ask is wide. This makes you look, you can't settle for bad prices. I know that right now. Here's an example. I put on trades. I put over 40 trades on last night, pending, and wondering if I got filled on anything this morning. Nick, I've been filled on nothing this morning. And let me explain what my positions were. So I looked at, just an easy chart here. Let me go to the SPY. Okay, let's go to the SPY. So I know my chart's a little messy here. Let me go to the daily. All right. So some of our very common, moving averages would be your 50, 100, and 200, right? Very common. I looked at trying to get filled right around the 200 moving average. I looked to get filled right around the 144 moving average. And I thought, well, if we've got a big gap from Thursday to Friday, and then another big gap from Friday to Monday, if this market stabilizes in here and is willing over the next maybe 30 to 45 to 60 days to do some gap fills or use the 200 EMA as a support level, I'm just trying to get filled. And, and I get it. Like, I'm looking for something like, let me give you a trade example. I've got a SPY here, so let me find that in my broker platform. SPY, I'm getting, like, if I can get like 40 cents on the dollar. So for example, on the SPY, I did a 525, okay, 525 by 524, which is now, $8 or $9 in the money. And I can't even get 45 cents for that credit spread. I have $1 risk, and I can't even get 45 cents for something that's almost $10 in the money. So wow, that sucks. That sucks. Yeah. So I mean, I get it. Like, maybe what I want is I'm not getting the fills that I want, but I'm not going to settle for like a market price. I mean, right now that 45-cent credit that I've got pending is trading for 36 cents. So I get it. I know it's messy, but I see it. You don't. I'm just telling you, this is what I wanted to see. So I've got a 50, a 100, a 144, and a 200. And you and I pointed this out last week. I mean, if all we're doing is coming into these zones, you got to wonder if the buy opportunity is there. The NASDAQ, on the other hand, has broken through the 200. But broken through and closing below it and doing more damage below it is very different than actually just testing it as the first time we've seen it tested since October 2023.
Sure. So, and I've got the you've got the EMAs. I've got the regular SMA on my Q's 200-day moving average. You can see we're just shy above it on the SMA, but as you pointed out, just around it on the EMA. So maybe it's, but this is something we always kind of point out. These are zones. These are ideas. These are not pinpoint perfect indicators to hold a moving average. People use different moving averages. They use different, it's a feel. And I think that if you are a bull on this market, Chris, I got to say, I think if you're hitting the 200-day moving average, the classic equities buyer, spot, this level should hold. If it doesn't, if we break these 200-day moving averages, I think you got problems. I think you see more, I think this turns into, what are we looking at on the Qs? We are looking at currently about a 14% pullback in the Qs. I think if you break that then you're suddenly looking at, maybe a 20% plus sell-off in the Qs. I mean, that if you can't hold any of these support levels, I got to admit I was wrong about being bullish. But again, I'm kind of at the last line of defense here with this level support, 200-day moving average. I like it long, but I'm waiting for, what I think could be, maybe a last capitulation move this morning. If it moves lower, I may take another stab, and we'll see if I get my heart broken a fourth time. But this is I've had 3 attempts, Chris, nothing holding. But again, if this bull market's going to hold its own, you would expect the 200-day moving average to hold. If it doesn't, I got to seriously kind of pause, hit the brakes on it.
Yeah. And I'll just highlight what you had mentioned earlier. It's concerning how fast it happened, because right now for shedding, and it's, I know you mentioned over the last, roughly a month, right? How many trading days is this? It's been around 20 trading days, 19 to 20 trading days. Well, I think what makes me nervous is if it's going to get worse, there's no real savior until maybe the Fed rate cut in September. And I put this on my chart. Let me see if it's still on this VIX chart. I kind of wrapped up my live session today, and I wanted to reiterate this with you. I don't want to see the Fed step in and cut rates today.
I don't either.
I think that's the worst thing that could actually happen.
With Frank this morning, I said there's a possibility they do it, but I don't want them to, because you do that. That's like when they halt a penny stock when it's trading, and let's say it gaps down, they halt it. The second that market opens back up, boom, it's much lower, because the market freaks out.
Yep. So I put for, let's just talk the bad. It feels bad. It already is, but the VIX has come down, 20 plus points off the highs. Really crazy. And it's just, the timing is so perfect to be wrong. I'm long at 1050. I get out at 19. I make some dollars. I'm long at 20. I get out. I mean, I had VIX calls on here that I would have I was not expecting a spike to 60. I don't think anybody was. I could see like the 20s and 30s, but not the spike up like we had last night in opening bell. I mean, by the way, opening bell today was not at 65. This was like all through the night in order to trade the VIX. And I looked at this morning. If I was going to fade this, and you can see I have it way up here, okay, I'm putting on like that worst case scenario 2008, 2020 VIX level of 80, 85. I'm going to try to get filled on a credit spread. But to me, it's still defined risk. Like I'm not doing anything because a put on the VIX is awful. If you're trying to buy a put, it was when we were trading at like 50 something, if I bought a put on the VIX, it was like a $30 debit. Yeah, so you're essentially paying for all of it to go back to sub 20 to make any money on it. So it's a little stupid. But anyway, back to this point. Bad this week would be that the VIX continues to elevate and push up again towards these highs at 65. That's not a good thing. If we spike higher than that, obviously 80, 85 is the big level we saw back during the worst times in the financial markets. Yep. As far as the VIX is concerned, and obviously those weren't pretty times in the markets either. Asia contagion, right? Let's see. Japan needs to figure out what the hell it's going to do, because right now the Nikkei has dropped almost 27% since the high.
Crazy. Look at this. I'll just pull it up just because you mentioned it. Yep. You stay where you are on that chart. I'll show you this. You want to talk about 200-day moving average not holding? There's, as you just pointed out, the culprit today for everybody listening. Why is this? What's the root cause? Look no further than Japan. The yen skyrocketing, and the Japanese stock market. We talked about being a little bit concerned about a 10% drop in the S&P 500 in 20 days. Guys, in 26 days, the Japanese stock market has lost 23%. And that's a big stock market. That's a big global stock market that just took a huge tumble on yen strength. They raised interest rates at the same time. There was some speculation that the Bank of Japan took it as an opportunity on Friday to really, put pressure to strengthen the yen further, more intervention. You have U.S. economic data coming in light. Manufacturing PMIs last week were abysmal, and really aggressive selling. So where you're at with the VIX, as you just pointed out, high VIX, big sell-off in this chart. Take a look at the yen, down 2.3% against the dollar, or the dollar. Yen is up a lot against the dollar today. I still am holding tight to my USD CHF trade. This is the only thing working for me right now, Chris. I've got my USD CHF short position. Pretty much everything else has been No bueno. Here's everybody getting smoked today, and Frank is the hero of the day with his puts on. How are you feeling today, Frank? Let us know. Let us all be jealous.
So I did take some profit, but
Okay.
I couldn't really get filled at a price I wanted. I had these out of the money puts at 410
On the Qs.
Qs.
Yeah.
They opened up this morning. I got them for, I think it was like, I can't remember. It was like in the teens or 20 cents range. It opened up at around, I think it was 5. And
That's so
Just
good, dude.
I took
That's
some
awesome,
profits, but they moved so quickly, and because it was a 1 day out expiration, because I took it Friday afternoon, they changed so rapidly. I think I ended up getting out at like 2.
Sure.
So
So
they were
like
moving way too
2,000%
hard.
gain
But
ish.
Yeah. What was the percentage gain roughly, Frank? Was it actually 1,000?
it was somewhere around there. It was up to, I think it was about 3,000 at the open.
Oh my gosh. Well, congrats on that. And Frank's been on the more bearish side of this market, absolutely playing it correct. So shout out to Frank. And we're trying to figure out, Frank, let me ask you, because clearly you're the one who's most tuned in right now. Where does this market bottom out? Is there a bottoming point? Is there a bounce trade, or do you think any bounces are just further, opportunities to add to shorts?
Yeah, so I think it depends on where we close today.
Yeah.
I didn't think we were going to hit directly on the 200-day for the NAS. Well, I thought we would end up there, but I didn't know it was going to be this morning.
Right.
Me neither, that's for sure.
Right.
And the fact that we've given more than half of it back, so we came down, I can't remember how much, was it like 1,000 points?
Yeah, something
Somewhere
like that.
around there.
Crazy.
900 to 1,000 points. We're giving, or we're pairing that loss right now, so we're above the 200-day. I think it depends on where we close. So if we get this sort of hammer candle, I think maybe price will hold up, but we'll just have to see. Like as soon as we open, there's just a buying frenzy. So this could be a level where people want to step back in. Even the way the candle is right now, I'm not really confident. It may even take a couple days, like it may hover around here, try to recover, and then we see a sell-off lower. We've come pretty far from our highs, so I don't know. I think if we do see somewhat of a big correction, that it's gonna be pretty fast. So if you're trying to trade to the downside, you're gonna have to make a decision immediately.
Yeah.
And if you're
Frank,
trying to buy, this could be a time to scale back in.
Yeah.
The 200-day is
Frank,
the.
I don't mean to cut you off. I think there's
I'm
like a little
sorry.
bit of delay. Sorry about that. I just wanted to mention that what you're talking about with this like speedy buyback, I will go ahead and say this. Even though I am generally speaking more bullish, the feeling of this market feels similar. And Chris, maybe you can attest to this too. 2022, there were rips in the morning that would then get sold hard into the afternoon.
Yep.
And it was like that like every single day. Do you remember that environment? And it was almost like you wanted to kind of stay long very briefly and then take your profits and get out of the way.
Yeah, it's either you get in, you get out, or you are more positioned to fade it. I mean, the best way to make money in 2022 was fading those rallies, as we had essentially a 6-month correction. Like I said, I think the thing to watch today is if we finish with a green candle about the same as where we are right now, that's a little bit more relief as far as price action goes, as opposed to, here's what I don't want to see. I don't want to see green with a large body all of a sudden become something like this, where it's green on the day, but it's just absolutely smashed right back down to the lows again. Yeah. So if we finish red, that's even worse. If we close, that's even worse. But if we can maintain this, okay, fine. I think the problem is this market is so driven by news and data that gets put in, and sometimes it's priced ahead of time. The market's usually 6 to 9 months forward thinking, but there's no data, man. Like, that's the problem. It's like if the Fed stays quiet and they don't do something silly like an emergency cut, then it's going to be, what does Japan do overnight? And how does that affect the U.S. market going into tomorrow? We have all these earnings reports this week. I'm not going to take, I mean, Frank knows it's one of my favorite things during earnings season is to place a bunch of trades. And like last week, I had like 6 out of 7 winners. I love doing that. But this week, I'm like, I don't care what earnings are at all because all you're going to see is volatility.
Yeah.
And I don't know if it's going to be, the earnings might not matter at all. And it might be everything is down because the market is down and there's nowhere to hide. A good print could, temporarily push it higher and then it messes up your downside because it's just going to fade anyway. So I'm probably going to bypass earnings for this week. I didn't see really any major notables. I like playing the Mag 7s. Those were super liquid and easy movers last week. But there's things I'll be watching. But more importantly is like, I just want to watch price. We're sitting at these critical levels on the Qs. We're nearing critical levels on the S&P. So I'll ask you guys this. Would you be surprised if the S&P this week is going to test the 200?
I think so. I think testing the 200 is giving back everything from the beginning of the year, which was that AI trade.
Yep.
That was on the NAS. They've already done so, but I guess S&P and Dow might complete their moves. I don't see tremendous upside. I think we catch big bounces every now and then, but I think we're going to test lower levels.
Yeah, I think that in terms of the S&P 500, man, it breaking this level of support, depending on how today closes, is going to set the mood, I think. If we take a look at my screen just for a second, I'll show you this. So look at the S&P 500, huge level of resistance here back in March that proceeded into April where we saw the big, slide. And then when we took out that level, we held it as support, ripped from there. But now that we've come all the way down here and already showing signs of breaking that, it's a little tough. I think that for me, as this market pulls back, I'm hesitant to try and call the bottom per se, but I'm taking stabs on the long side. I'm getting out quickly if I'm wrong. The idea that I have is overall earnings. You actually had this up on your screen, Chris. Earnings overall have been pretty good. There's been a lot of beats in the earnings reports that have been coming out. At the same time, US GDP figures massively beat. Today we had services PMI that came in better. So the tricky part about this is there's something in this for everybody. If you're a bull, you can point at stuff. If you're a bear, you can point at stuff. I do think that the bear case has substantially strengthened in the last 2 weeks, especially with the, kind of fallout event in Japan. That is massive. Like trying to time the bottom of that is going to be hard. But I do think that overall, again, big tech earnings have overall been pretty good. The stock market's earnings overall been pretty good. But the question now is the economy able to hold up to not destroy those earnings in forward estimates? That's what's going to really, for the stock market, either hold this thing up or cause a much greater pullback. I think it's all about the Fed. Yes, it's all about, rate cuts, how soon, is the economy going to hold up? But it's about the labor statistics. It's about the economy readings way more now than it is about inflation. Inflation, I think, is a total side story now, because now we're saying, are these prices for the stock market indices justified on good forward earnings, or are they way too high and this market has more room to the downside to correct to meet those earnings?
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.